Hello, everyone, and welcome to Financial Accounting. Today, we will talk about how to estimate the cost of goods sold and ending inventory by the gross profit method and by the retail method. It is expensive and time-consuming to take a physical count of inventory. As a result, in interim financial statements, some companies might estimate ending inventory and cost of goods sold. Using this estimate helps avoid having to shut down production or close the doors to the business to do a physical count. Let's look at two methods used to estimate inventory for interim financial statements: the gross profit method and the retail method. When using the gross profit method, follow these three steps. First, determine the cost of goods available for sale. This can be done using accounting data. Second, estimate cost of goods sold by multiplying net sales by the cost ratio. The cost ratio is based on past history of the company. Third, deduct the cost of goods sold estimate from the cost of goods available for sale to determine ending inventory. When it is necessary to estimate the cost of goods sold and the amount of inventory on hand, the assumption is that the rate of gross profit earned in previous years remains the same for the current year. When the rate of gross profit is known, the net sales amount can be divided into two parts: the gross profit and the cost of goods sold. The net sales is 100%. The cost of goods sold is the difference between net sales and the gross profit. For example, if the gross profit is 40%, the cost of goods sold is 100% less 40% equals to 60%. Let's look at the example. In March, Matrix's inventory was destroyed by fire. Past history shows that Matrix's normal gross profit ratio is 30% of net sales. Here are some other balances in Matrix's accounting records. Sales were $31,500, sales returns were $1,500, beginning inventory was $12,000, and the net cost of goods purchased was $20,500. Let's estimate the amount of the inventory lost in the fire. First, determine the cost of goods available for sale. This is calculated by adding beginning inventory and the net cost of goods purchased. The cost of goods available for sale is $32,500. Second, estimate cost of goods sold by multiplying net sales by the cost ratio. To accomplish this, remember that net sales minus cost of goods sold equals gross profit. Since the gross profit ratio is 30%, then the cost of goods sold ratio has to be 70%. Net sales is calculated as sales minus sales returns and sales discounts. In our example, there are only sales returns. 70% of $30,000 is $21,000, which is the estimate of the cost of goods sold. Third, deduct the cost of goods sold estimate from the cost of goods available for sale to determine ending inventory, which in this case is $11,500. Let's look at another example. As of January 1st, the beginning balance in the inventory account is $50,000. We know that during the month, we purchased $20,000 of inventory. The first step is to calculate the total cost of goods available for sale. In our example, it is $50,000 plus $20,000 equals to $70,000. The normal gross ratio for prior years was 40%. Based on that, we can estimate the cost ratio. 100% less 40% is equal to 60%. Now let's move on to the second step. During January, net sales were $30,000. To estimate the cost of goods sold, we multiply the net sales by the cost ratio. The estimated cost of goods sold is $18,000, which is $30,000 net sales multiplied by the cost ratio of 60%. The third step is to deduct the estimated cost of goods sold from cost of goods available for sale during January. 70,000 less 18,000 is equal to 52,000. Now let's look at how to use the retail method to estimate inventory. We're going to look at matrix company again. To use this method, management must determine the value of ending inventory at retail prices and then convert from retail prices to cost. First, we need to determine the cost ratio. This is calculated by dividing goods available for sale at cost by goods available for sale at retail. Matrix's cost ratio is 65%. Next, take matrix's ending inventory at retail of 22,000 and multiply it by the cost ratio to arrive at estimated ending inventory at cost. For matrix, this is $14,300. Thank you for watching this video. I hope you found it helpful. Feel free to share it with anyone who is interested in learning accounting. I will see you next week.